Trading Strategies. In this video, we'll go over how to trade breakouts. Keep in mind that each strategy will take time and practice to get down, so you'll need to watch these videos over and over again and continue to practice looking at the charts. So what is a breakout? A breakout occurs when the price breaks out and closes above the resistance level or below a support level. Let's have a quick review and make sure that we know and understand what support and resistance levels are. A support line can be identified by connecting the low points of a currency's price. They are identified as low points if the price rebounds upwards right after reaching them. By definition, the support lines need at least 2 points to be formed, but I suggest at least finding 3 points for a stronger indicator. The support line can be horizontal or angled. Resistance lines are effectively the same as support lines, but the difference is they are above the current price and they act as a ceiling from which the price falls from. They too can also be horizontal or angled. When we have a support and resistance line together, they create a trading range. So both lines keep the movement of the price within a certain range until the price makes a break either above or below. What I didn't cover in the last video is that trading ranges are formed due to supply and demand and market psychology or market sentiment. When the price breaks out of the range, it signals a change in the supply and demand and the beginning of an upward or downward trend. Let's say the price breaks out above the resistance level. At this moment, the resistance line might become a new support level as the supply and demand have shifted, so most likely a new level of support and resistance will be established. So here's the general concept of trading breakouts. This applies not to just cryptocurrencies, but forex, stocks, commodities, and when looking at the charts, it works on any time frame. It's a method of technical analysis that follows certain rules and they can be applied universally. So what's first? First, you'll need to find a financial instrument, a cryptocurrency pair, a forex currency pair, a stock or commodity with a clearly defined support and resistance level. We only need one clearly defined support or resistance level to anticipate a breakout. However, a trading range created by both a support and resistance level is more beneficial as you can take advantage of a breakout in either direction. So either above or below the current range. That said, how should you enter your order in a breakout? Let's assume you expect the breakout to be above the current range. So there are several ways to enter the market at a breakout. It all depends on your trading style and the amount of risk you're willing to take. First is at the actual breakout. To trade at the breakout, you will need to devote more time to actually watching the market so you can place a market order whenever the breakout occurs. This is the most risky entry point as the movement has not been confirmed and there is a high chance that the price will move back into the trading range. The second entry type is a pending order at the price level placed above the current range. This is a preset price level that can be based upon the current range or determined by another indicator. I recommend that the price level of the pending order is placed at a previously unachieved high. This entry type does not require you to watch the markets as the order will be executed automatically upon reaching the price. The third entry type, and my favorite, is to wait for the candle on the time frame you selected to close above the range, reaching a new high, and in this way confirming the breakout. It's utterly important that you exercise patience in order to confirm the breakout. Having the candle close above the range is one of the most strongest possible signals for a continued upward movement. Once you've determined your entry, you'll need to have your exit strategy in place. A good way to determine a reasonable target profit is to analyze the previous price movement of the currency. Your exit strategy will depend on specific trading conditions, your trading style, your expectations, and the risk to reward ratio you're currently using. The balance you have to consider when placing your stops to exit your trade is to set them not too far so you don't lose money if the market turns against you, and not too close so the small price fluctuations take you out of your trade too early. In this case, we could decide to place it right about here, which would be our maximum permissible loss. One thing to look out for when trading breakouts is a fake breakout. Fake breakouts occur when the price breaks past the support or resistance level, but instead of continuing its movement, the price moves back into the previous trading range. So here you can see the price breaks outside of the range but does not close